Hello everyone, this is the pre-market report video for today 30th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Quickly let's analyze the last Friday's FI data. In the cash market, FII net sold for 1200 crore rupees. On the other hand, in the derivative market, the net bought substantially. For example, in the option market, the net bought for 52,000 crore rupees. So the important question we need answer is what they bought. In Bank Nifty on last Friday, the net bought for 30,000 crore rupees, and in Nifty the net bought for 11,000 crore rupees. Here there is no straightforward answer, but considering change in open interest and the Friday's price action, I'm guessing FII net bought call options in the Bank Nifty and put options in the Nifty index. Hence the status is little bit confusing at present. If required, please pause and have a look. This is the before last week's status. As usual, retail traders were net sellers on both call as well as put options. On the other hand, FII net buyers on both sides. In simple terms, FII expecting the breakout on either side, retail people stands more inclined with the range bound movement. So on that day, 23rd September, 1 week before, the deciding factor was proprietary traders, and they were call options net buyers and put options net sellers. Hence, from the proprietary traders perspective, on 23rd September, they expected the range bound movement in the downside and breakout on the upside. This upside proprietary traders stance inclined very well with the FII's future market stance. Hence, in the last 3-week expiry, market keeps on increasing. So both proprietary traders and FIIs were happy on the expense of retail people. On the contrary to that last 3-week expiry, on last Friday, proprietary traders now turned and inclined with the retail traders this week. They sold more call options as well as sold more put options, which is completely sync with the retail traders. Hence, both proprietary traders as well as retail people now expecting a range bound movement. Whereas in the future market, FII becomes much more bullish. They're having 81% long and 19% short. Hence, obviously, FII wants market to go up in a month period. However, it's not easy for Nifty to go higher this week without the help of proprietary traders. Nevertheless, FII will try. Hence, analyzing all the data, this week not the same as last 3 weeks, and it is really about the proprietary traders strength. So if we assume proprietary traders are as big as FII, then we can expect a range bound movement. Please remember, this week Wednesday is holiday, so tomorrow is Bank Nifty expiry. If today and tomorrow FII net sold significantly, possibly we can expect Nifty to have upside breakout on Thursday. So it will be really interesting how the next 2 days data will come. Summary, FII wants the market to move up. As far as I know, they don't care about Bank Nifty. They want Nifty to go up. So I think they will use Bank Nifty option to manipulate Nifty. In case of proprietary traders and retail people, they want the range bound movement. In my view, I'm not taking any negative stance, at least for today and tomorrow. I'm inclined more of range bound to positive. But anything can happen in stock market. Disclaimer, it's just my view. I can be completely wrong. Don't make investment decision based on this. And also, this is just based on open interest data and assuming the no negative global influence. If the global momentum deteriorated means, then that can significantly alter the position. Because globally, lot happened during weekend. First, on the positive side, Chinese central bank announced more stimulus package, which is good for metal stocks. However, on the other hand, the political spectrum of Japan is changing because the present defense minister expects to become a new prime minister, and this defense minister was the vocal critic of Bank of Japan's past aggressive monetary easing. Hence, already during weekend, yen increased by 2%. So, market will be reacting for this new Japan's prime minister, and it got the potential to deteriorate the global momentum. That's the short recap on Indian and Asian market during weekend. Now, let's move to US. On Friday night, before their market opening, US Bureau of Economic Analysis released the PCE inflation data. On year-on-year basis, in line with expectation, core PCE inflation slightly increased to 2.7% from 2.6% in July month. However, on month-on-month basis, the data was better. It increased just 0.1% against the expectation of 0.2%, which is good. Then the overall PCE inflation for the August month comes only 2.2% against expectation of 2.3%. At present, it's just 0.2% away from the 2% Fed target. This is really very good data. On the basis of this, US market opened significantly positive, but however, profit booking made the US market to close completely mixed. Dow Jones increased 0.33%, S&P 500 closed mild negative 0.13%, and Nasdaq down by 0.39%. In case of VIX, it increased above 10% and moved around 17 from below 15.5. And in line with the US market, GIFT Nifty on Saturday morning, it closed at 26,289. So if we consider 100 points premium, then for now it's indicating the flat to negative 50 points gap down opening. Then regarding Indian ADR, as it is all closed negative of around 2%. However, if we consider the Friday's bank's price action in the Indian market, it's only showing the arbitrage of negative 0.5%. Same for IT as well. Because of very good Accenture results, on Thursday night, IT ADR stocks increased to 2%. But that was not materialized on the Indian market. So overall, both the sector indicating the negative trade, but not 2% negative trade kind of as it is indicating. As a summary, global momentum is okay and good, but the Japan new Prime Minister could be a concern. For now, GIFT Nifty and ADR indicating a flat to negative opening. Then as per stock open interest, L&T Mindtree, Marico, Birlasoft, IEX, Hindustan Copper, Trent and City Union Bank got an increase in open interest along with a negative close indicates the short built up. On the other hand, BPCL, SRF, Coforge, NTPC and Polycab got an increase in open interest with a positive price close, which means these stocks got the long build up. About the things to look out, before our market opening, Chinese PMI data is due. Then during our market time at 11:30 AM, UK GDP data and Germany's retail sales data shall release. And in the aftermarket hours at 5 PM, RBI credit information review. Then in the night for US, Chicago PMI data and Fed chairman speech are some of the important items we need to keep an eye out today. Before going to technical, just one more thing regarding oil price. It dropped slightly at this time of this video. WTI crude trading at $68 per barrel and Brent crude traded at $71.5 per barrel. Coming to technical, last Friday Nifty opened 30 points gap up and hit a new intraday all-time high, but turned volatile in the second half, losing all the morning gains and ended at below 26,200. Thus on the daily chart, Nifty formed a bearish candlestick pattern. However, continued the formation of bullish candlestick pattern on the weekly chart for the third consecutive week. Additionally, Nifty maintained higher high, higher low formation for another session and the momentum indicators RSI and MACD maintained an upward bias, all indicating a positive trend ahead. Hence, as long as Nifty is above 25,850 mark and above important moving averages, Nifty expects to move up. On the higher end, a fresh round of rally might begin above 26,300 and it could potentially rise towards 26,600. In case of Bank Nifty, it opened 40 points gap down and closed at near 53,830 due to profit booking. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern, falling below the 5-day exponential moving average. In addition, on the weekly chart, it formed a small bodied candle with a long upper shadow, indicating selling pressure at higher level. However, higher high and higher low formation remained intact for the past 2 weeks, indicating an bullish stance. Hence, Bank Nifty got the divergence signal. So, Bank Nifty has to hold above 53,750 zone for an up move towards 54,250, while on the downside, support is at 53,500 and then at 53,350 level. According to the weekly options data, the maximum call option open interest was at 27,000 strike, followed by 26,000 and 26,600, with a maximum new call option rating at 27,000 strike, followed by 26,800 and 26,400. On the put side, the maximum open interest was at 26,000 strike, followed by 25,000 and 25,500, with maximum new put option rating at 26,400 strike, followed by 26,300 and 25,500. Thus, from options data, it's indicated that 26,400 might remain the near-term resistance with 26,000 as support. So, that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.